So here's the verdict, everybody. The US dollar, the one that's run global finance for the past 80 years, is losing its grip. Not because it collapsed, not because of some dramatic crisis, but because of something far more dangerous. Dozens of countries just quietly stopped needing it. And Canada is sitting with 71 cents of every reserve dollar still tied to the United States. That's not a comfortable position to be in right now.
But here's what makes today's story different from every dollar is dying headline you've ever seen. Canada didn't wait for the crisis. Canada is already moving, and today we're going to show you exactly what that means for your pension, your mortgage rate, and for the price of everything in your grocery cart.
So let's go back to where it all actually started. Trump's trade war, of course. When Donald Trump began weaponizing tariffs against Canada, against Europe, against China, against essentially everybody, he did something that no enemy of America would ever have done on their own. He gave the world a very loud reason to look for alternatives to the American dollar system.
And this is the part that doesn't get enough attention. The dollar's dominance was never just about the size of America's economy. It was built on trust. The trust that if you held dollars, the rules wouldn't change overnight. That America was a reliable partner in global trade. Well, Trump torched that trust, and the world, it took notes.
The BRICS nations, Brazil, Russia, India, China, South Africa, they built their own development bank. The new development bank, it's called. And when you read their 2026 investor presentation, it is blunt about what they're actually doing. They're building a large Chinese yuan borrowing program. Significant outstanding yuan benchmark bonds. So they are financing infrastructure like ports, railways, power grids in local currencies, not dollars.
Now let's be completely clear about what's driving this. This is not a grand anti-American revolt, although it should be, but this is a spreadsheet decision. Finance ministers in developing countries are being offered cheaper loans at lower interest rates and faster approval. They have fewer conditions attached from Washington. When a country needs to build a hospital or a highway and China offers financing at 2% while the US link system wants 5% with political strings, they take the 2%, obviously, every single time.
And the IMF's own data confirms where this is heading. According to a report on IMF reserve data, the dollar's share of global reserves is still declining, gradually but consistently. And the new developments bank yuan program, well, it gets bigger every quarter.
And here's what's happening on the ground. When a country builds a railway with the Chinese yuan financing, the supply chain follows the money. You have Chinese construction firms, Chinese procurement standards, Chinese payment systems in yuan, not dollars. Now, Canadian companies trying to win contracts in those environments are now competing in a market where the rules of the game have fundamentally changed. And most Canadians have no idea that this is even happening.
But the danger for Canada is not a dollar collapse.
No, the danger is a dollar that slowly, gradually loses the automatic dominance that it once had. Because Canada built its entire financial architecture on the assumption that that dominance was permanent.
So let's talk about what that actually means for Canada, because this is where the numbers actually get personal and affect you. Canada's own 2025 reserve report said that 71% of our liquid reserves are in US dollars. 71%, that's huge. And Bank of Canada research says that 88% of the value of Canadian imports are invoiced in US dollars. That means when the dollar weakens, even slightly, Canada pays for it directly. Import costs go up, the loonie weakens, our grocery bills go up, and here's where it really hits home for you in a concrete way. Your pension fund. The CPP Investment Board manages over $600 billion. The Ontario Teachers' Pension, the CAS. These are among some of the most sophisticated infrastructure investors on the planet, and they have put billions into global projects, ports in Australia, energy in Europe, infrastructure across multiple emerging markets.
Those investments have historically operated on dollar-dominated terms, dollar-based financing, dollar-based contracts, rules that Canadian firms know how to navigate.
But now, When a country builds with Chinese yuan financing, well, Canadian firms bidding for those contracts are competing in markets with different currencies, different payment systems, and different logic.
And Canada's pension money, your retirement savings, well, that's already in those markets, with or without a strategy.
Think about what happened back in 1995. Canada, remember we had that debt crisis. The Wall Street Journal basically called us a complete basket case. Interest rates spiked, the loonie tank. Canadians who had their retirement savings too concentrated in one place, who hadn't diversified, paid a brutal price. And the lesson was here that dependency is a liability and you need backup.
Well, that lesson applies at the national level right now. Canada is heavily concentrated in one currency. And in a world where that currency dominance is beginning to fall, well, that is a structural dependency Canada needs to address.
So what the heck does Canada actually do here?
Well, there are 3 things that Canada needs to build. First, domestic investment architecture. Canada has the pension capital, we have the sovereign wealth, but we don't have an organized national framework for directing that capital towards Canadian priorities. When we need to build something big, a transportation line, a port expansion, a critical mineral corridor, we should not go directly to the dollar just using whatever they're charging that week. We should have our own patient, organized capital, like the way we built our railways in the 19th century and the way we built our energy infrastructure in the 20th century.
Second, we need trade diversification that goes beyond announcements. Canada's already doing this, yes. The EU trade deal, the Indo-Pacific strategy, the New Mexico MOU, but those need to go deeper into the financial architecture specifically, like currency swap agreements, trade settlement mechanisms that don't automatically run through the USA. Because right now, even when Canada trades with Europe, it often settles everything in US dollars. And that is a dependency that we do not need.
And third, this is the one that gets the least attention. Canada needs to build what we'd call financial backup generators, the ability to fund its own priorities without needing permission from every single external financial system. Because in a world where financial blocks are forming, Canada should be able to operate confidently inside all of them, not trapped inside the US dollar.
And here is what actually makes us optimistic. Canada is not starting from zero. We have a lot going for us already. The CPP Investment Board, with over $600 billion in assets. Canada's fiscal position, we're the strongest in the G7. Our energy resources, oil, gas, uranium, critical minerals, are being competed over by every single financial bloc in the world trying to build the infrastructure of the future.
And don't forget our banks. We have the Royal Bank, TD, the Big Five. They came through the 2008 financial crisis better than almost any major banks on the planet. While American institutions were collapsing and the U.S. government was writing trillion-dollar bailout checks, Canada's financial system held. And that credibility, well, that still matters globally.
And the question is not whether Canada has the tools. That's obvious, we do. The question is whether Canada has the strategy to use them. Right now, Canada's posture on this financial rerouting is essentially, hey, watch what happens and hope that the dollar stays strong. That's not a strategy. That's a prayer, and we need to change that. The countries that are going to shape the new financial order are not the ones clinging to the old rules. They are the ones that built enough financial independence to help write some of the new rules. Canada has every qualification to be in that group and even lead it.
But only if it moves, and moves now. The window where Canada can shape this transition rather than just react to it, it's wide open. It won't stay open forever, but luckily, we have a banker in charge of our country right now. So here's what we want to know from you. Do you think Canada has the political will to build real financial independence?
Or are we too comfortable, too locked into the old US dollar dependent system to make changes that this moment is actually demanding?
So make sure to subscribe if you want to stay ahead of this, because the Canada-US financial relationship is moving fast and we're going to be here every step of the way.
Thanks for watching, everybody, and we'll see you tomorrow.
Ciao for now.